Yeah. Can you hear me? See me? Can you guys hear me? Hear me? Test test. Very nice. Is it working? Okay. What about video? Oh, okay, perfect. Thank you. Okay. Um, Everybody else good? Just want to double check. Just give me a thumbs up. Okay. Okay, cool. Um, I, I like to start by spending some time going over like the state of the market, but I usually like preface everything by uh, saying that these are all recorded, and if for whatever reason you can't make it, or if you want to go back and rewatch it and just go over a topic again, they're up on the website on the T3 YouTube stream under the options to play tab. Typically, the following day at the latest, the afternoon. So if you are if you have any questions when you're like reviewing it again, don't hesitate to reach out, especially if you weren't able to make like the actual like live session. So even if it's like something like a few months ago and you're going back through it and you have a question about it, just please don't hesitate to reach out. All right. Uh, so what, what last week? Actually, the last 2 weeks were um, positive but unusual, right? So like that's kind of what I was like starting to go on about a couple minutes ago when we were talking. Is that uh, there was overall trending positive action, right? But it was in unusual or non-participating up until that point names, right? And that's what made it hard. I mean that's why I feel like it was like choppy, and I don't want to say it came out of nowhere because I mean like that's kind of how like trending tapes work. So I mean definitely there were stretches in 2018 when we were in like really aggressive uptrends where we would see these types of moves. Also last year, um, I guess by the time we got to the summer of last year, it was a little bit different because we had all of like those headlines about the China tariff. So I mean, it was a little bit different, but still, when you get to these long stretches of just like really consistent uptrend, like kind of like consistent higher highs, just keep pushing, 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 you tend to see these types of moves in the market where you have maybe like one, two, even like three sectors that have been significantly outperforming, and then two to three sectors that have been significantly underperforming. And then what happens is you kind of get like this really like snap rotation, right? So you get the leaders kind of pause and or pull back, and then a lot of the laggards really start to like wake up and rip, right? And last week and kind of like the week before, what happened was you had like the Qs, right? So tech really had been leading like this move higher off the March low. There's something right there. So the Qs had really been leading the way higher, but last week the Qs, up until Friday, actually were flat to down. The Qs really weren't doing a whole lot of anything at all, and the Russell, which is kind of the barometer, I guess, for a lot of like the beaten up names, right? So like last week, the Russell was just absolutely ripping. I mean, at one point when I was doing the math, I don't know if it was like Thursday morning maybe, or maybe like Friday before the open. At one point, the Russell was up like almost 7.5% for the week, and the Nasdaq was down about like 0.4%, something like that. So there was like a near 8 percentage point separation between what like the Qs, so what the recent leaders have been, and what the laggers have been. So it just shows you how much and how sharp of a rotation move there was. And again, like like I don't want to say it came out of nowhere, because there are, if you go back and look, you can kind of see some signs, but like you never expect it to be as dramatic as it is, or at least I don't. Well, I don't I'm not sure that there was necessarily a specific reason. Um, I, maybe it has thing maybe it has something to do with like some of like the states starting to open back up, right? Because obviously, like a lot of like the beaten up names were travel related, they were restaurants, um, right? Like things along those lines, like transports, like the airlines, right? So it could have something to do with the fact that things were finally starting to open up again, as the quarantine kind of started to lift. Maybe it had the fact that there was some talk of retaliation for what China, like the ruling against Hong Kong, right? So those big global multinational tech names are a little bit more at risk in that scenario. So then people would look at potentially some like smaller, more domestic names that don't have that same type of risk. So that there's, you could say that there's definitely reasons why it could have played out, but I feel like what always catches me by surprise is like the magnitude of it, and how fast these things tend to happen. So it's not like, if it was just like 2 to 3% and it was more gradual, like then I feel like it's easier to like to manage in those scenarios, right? Because like stops wouldn't get blown out on the upside, stops wouldn't get blown out on the downside. But when you get like these like really just like snap, like severe, fast, quick moves, I feel like it makes it tough, because all of a sudden, like a stock goes from literally flatlining to being up like 20% in like 2 days, or a stock goes from just being in like a real consistent uptrend to all of a sudden dropping like 10 to 15% in like 2 days, So it makes it so, like, I mean, it's just like some of these things, like look at like DocuSign, I mean, like this to me kind of like, I don't know why I thought of it. It was just one of many, but it's like DocuSign, just basically since the beginning of April, just real steady, just riding the 8 EMA higher, right? Just kind of like doing its thing, like real steady, solid uptrend. And then all of a sudden, like basically over like a 3 day stretch, it drops from like high 130s, like all the way down to like the mid teens, broke through the 8 EMA, and then it looked like it was about to break through the 20, right? So it's like, like a real steady, consistent performer. All of a sudden, looks like it's about to like fall apart when it loses the 8, loses the 20, and then like 3 days later, the stock is up almost like what 35 points from there. So it's like it's like the like the shakeout. You have like the shakeout, and then you have like a breakout. And it's like DocuSign is just one of many. I mean, I could name like 20 to 30 patterns where it was like similar, where you had like these really great like bullish trends that had held like almost perfectly for 2 months. Then you have like these really nasty shakeout on the downside, and everything like rips right back, right? Or like stuff on the downside. I mean, some of these airlines are they're still holding around, but you have like a lot of these patterns where these things are just like hanging in the lower ranges. They're really acting very poorly. right? They're stuck below like moving averages, and then all of a sudden it's just like boom, 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 and they break out, and all of a sudden like they go from significantly underperforming to being up like 10, 15, 20% in a couple days, and all of a sudden like things are you're pressing short, and all of a sudden they like are ripping higher in your face, right? So um, like I find that like when you get these types of moves, so when you get these rotation days, like what I do is try to just be patient. All right. So like the first thing is like like don't like overreact. What I try to do is like stick with my stops. So if the stop gets hit, right? I'm respecting the stop. I'm closing the trade, and if it comes back and it resets the pattern, then I'll revisit the trade. But like I'm not gonna like like what I really don't want to do is get into the point where I am like chasing things around, like trading on tilt. So I don't know if you guys are familiar with that term, but basically when you're just like letting your emotions take over because you're upset that you either got stopped out, or maybe like you had the idea that you wanted to be short and you didn't stick with it, and all of a sudden the thing works out perfectly, right? So what I find is like it can be like better or more beneficial to me if I like just let things play out the way they want to play out, right? If it hits my stops, it hits my stop. I close it out. I wait, right? And then sometimes whether that's just like trading like lighter, so if I have to like sit and wait for like setups to kind of reset, or if I have to like sit and wait to like get involved on like a breakout or a breakdown, and then maybe just like sizing down a little bit. So when things aren't as clean and they're kind of whippy, like sizing down to me kind of helps me stick with ideas, but stick with ideas and also trade, but also like I kind of like taking my risk down just like slightly across the board. Yeah, well that's why like I've been like putting like kind of like two like stop ranges, right? So it's like the technical stop, but also like the debit stop. Um, and yeah, like I've been really I've been like really like as closely monitoring like those as is possible. I mean, sometimes you get a gap like Pfizer this morning was kind of annoying. I mean, it had like a big gap, and it kind of went a little bit below that, but like I've been trying to stick with like the 50 to 60%. Well, I use 50 to 60% as like a ballpark, um, and I like that as like a stop range because I use basically the 100% level as like most of my initial target ranges, right? So which I'm sure you've noticed. So basically, like most trades, like what I want typically is like 100% return on like that position. And then I'm looking to like cut back risk or close out the trade. Um, so there'll be instances when it's like it'll be before 100% or above 100%, but generally speaking, like I like the 100% return level as kind of an area where I'm thinking about taking off risk. So or even like above 90% really. Let's say it like above once something gets like above 90% on the return, then that's kind of the area where I'm thinking like I want to start rolling back risk or scaling back risk. So that's why I like to use like the 50 to 60% stop loss area because right like if your average loser say is like 50% and your average winner is 100%, right? And you're only batting 50-50. So if only like one out of every two trades is a winner, or 5 out of 10 trades is a winner, right? And your average winner is 100% and your average loser is 50%, then at the end of the day, you're coming out ahead, right? I mean, like it's a numbers game, it's a money management game. So that's why I try to stick with like 50 to 60% because then that means that the average winner, if it's at 100%, that's basically two times the average loss, right? So if your average loss is 50%, your average winner is 100%, then your average winner is basically two times your loss, right? Yeah, well, it's like sometimes I'll do technical stops. So like technical stops could be more relevant on like longer term positions because the premiums won't on a day-to-day basis, the premiums might not fluctuate as much. Yeah, yeah. So that like this is so this whole idea of like the trade stops and like the profit targets is actually going to kind of play into something we're going to talk about today too. We'll go over like the slides in a bit. Um, so what like the when you have like a longer term position like on a day to day basis, like the implied volatility of those contracts probably is not going to fluctuate as much. Um, but like the pattern itself could change materially, right? So like like some positions, so some stocks, like I'm looking for like either like a technical breakout or a technical breakdown, right? Now, like if something like happens and like that setup doesn't look as good or some it's like something changes, right? Like say I'm looking for like a breakout, all of a sudden the stock gets hit for like 5 points and it goes like the consolidation looks like it's about to resolve to the downside. If I'm sitting in long-term options, they might not actually have that big of a response to that, but the overall setup could have changed pretty materially. So that's why like I usually say one or the other. I'd say like 8 out of 10 times like I'd prefer or I'll go with like the debit stop loss over like the technical stop loss. Um, but I do like having both because it kind of I like to like the ability to like kind of like see how the trade is moving and if if it's maybe like the premium is only evaporated by like 40%, but like the thesis for the trade has changed, then I still want to be looking to exit that trade. All right. Yeah. So yeah. No. So I like one of like the real important things is like I think what is like important to look at. Well, there's I mean this is kind of going down like a different rabbit hole, but I think it's really worth talking about. Like people, a lot of people view options as like an all or nothing trade, right? Like some people will say like, you know, I'm buying, I'm buying like I'm buying a call. Let's just say I'm the same. Like I'm buying a call. I'm paying $2.50, and like I think it's going to go. I think the stock is going to rip, and I'm going to sell it for $10, right? And they say like, okay, it's either going to be $10 or it's going to be a zero, right? So like that's how some people look at it. They say like my risk is the price paid, and I'm either going to sell it for 10 or it's going to be a zero, right? I what I say is you don't have to look at it that way. There might be some instances where that's how it plays out, right? Like especially if you're playing like an event or a catalyst or an earnings report, like it might end up working out that way because like you could theoretically have like a really significant gap and it might be a zero or it might be a 10, right? But if you're more active trading options on a day-to-day basis, there's a lot of in between and there's like a lot of room to make money or prevent losses, right? By like just managing trades more closely. That's why like and it took me a while to figure it out too. Like I like when I first started trading options, like I was in that camp where it was like like I bought calls for $2. They're trading down to like $1 right now, so like I've lost about half the value. But like you know what, I'm like, oh, I still have 3 weeks left until expiration, right? Like I'm just gonna sit on it because like who knows what's gonna happen, right? Even though like maybe like my thesis for being in that trade like doesn't really stand, right? Like if I'm looking for a break, like so say like I like hypothetically, right? Like say I'm staring at like the spiders here and like say like I'm in like the 295 strike puts, right? And I was basically looking for reversal back below the 200 day or something along those lines, right? But the spiders now keeps holding above, holding above, holding above, and I'm like, okay, like my puts have lost half their value, but I still have 2 weeks, so I'm just gonna sit because I have 2 weeks left of my puts, right? And like maybe they'll break down. Well, like I like for a while, like I would just sit and sit and sit and say like, oh, I have I have a couple weeks left. Like my risk is what I paid, not realizing that like basically my reasoning for being in that trade like doesn't stand anymore, right? And like managing my loss, taking like that 50% loss and just like moving on, and possibly revisiting like that trade when it lines up again is smarter than just saying like, okay, it's a zero or a hero, right? Like I'm either gonna make a ton and have this come back, or it's gonna be a zero, right? Yeah, I mean, like, and it's it's one of those things where I feel like when like the light flips in your head, where like you can view options like they're trading vehicles where it's not all or nothing, is really when it goes from being like like kind of like a you know it's when like you'll see like your profitability start to turn a corner, right? It's when you have like a better control over managing your winners, managing your losers, right? And not viewing it as like an all or nothing. Yeah. Oh yeah. I mean, there's like, don't get me wrong. Like sometimes like so like there's plenty of instances when I've had positions where I've closed out for like a 50-60% loss, and then they end up like reversing or coming back and doing exactly what I wanted, and it would have been a home run. Like I certainly not, I'm not going to say that like my exits have always been spectacular. I mean, there's been plenty of times when I've exited and literally wanted to like jump out the window because it came back and did exactly what I wanted. But I'm just saying like what I found like over like a long term is that managing your positions when they're moving against you is equally as important as managing your positions when they're working in your favor, right? So sometimes like cutting the position loose, taking the loss, and waiting for like a different setup, or waiting for it to like set up again like how you want it, is actually it can actually be beneficial, right? Yeah. So it's one of those things where it's one of the challenges that comes with trading, right? Is just being able to admit that something is not working and taking the trade off, right? I mean, it's not just option trading; it's just trading in general, or maybe like investing in general, right? Like sometimes it's really hard to take off a losing trade, right? I mean, people's like natural instincts are to hold on to their losing trades longer, thinking like, okay, like I'm down money, like I'm gonna hold on to it and wait for it to come back. And when they're up money, their natural instinct is like, I want to take it off. I want to lock in like that winning trade, right? Like I want like the money in my pocket, right? But in reality, like the best or some of the best traders, right? They realize that like going against your instincts or what really like separates like the good from the great, or from the average from the good, right? It's like when you let your winners run, maximize your winners, and then when you're cutting your losers short, right? So taking your losers off before they get into like trouble, and then when the stock is working in your favor, you really maximize the potential on that, right? You maximize that winning trade. It's not easy. I mean, it's something that everybody works at. I mean, like the longer you do this, I mean, everybody works at it, and there's no like precise way to do it. But and like Joel said, I mean, like sometimes like a loser will come back and end up working out perfectly, and you're really frustrated. But I mean, I feel like over like a longer term, it's just equally. It's as important to have like a way you want to approach your losers as you want to approach your winners. Um, so I guess just like quickly, I mean, well, not quickly, but like so what I was talking about with the 200 day with the spiders is basically like that's the critical development that's happened over like the last week, is that we've traded now through the 200 day. We've back tested it a couple times now during trading during the session, right? So it was last Wednesday and on Friday. and both times we held above it. So you can see that we are starting to kind of move away from that 200A, which is definitely it's a definite positive for the overall action. All right, and what you also notice is that, I'm going to scroll a little bit further, is that the 8 EMA, you can see it here, the 8 EMA is starting to move above the 200A. So you're going to starting to get a cross of momentum above the 200A. All right, and like that to me is like a pretty good sign that we could really start to see some things start to power higher. Um, I mean, the Qs have been above their 200A for a while, right? Um, I mean, it's been a long time. I mean, the Qs never really were beaten up as bad, and they've been above their 200A for a while. But what was kind of like the line in the sand, and what you'll see what I mean is like the 100A, right? It was kind of like the last line of defense for bears, and the Qs traded above it, kind of chopped around. But what you'll notice is like when the 8 EMA started to move through the 100, right here, you can see it just kind of really created like this great like push higher where it was just like this like rising tide of buying, right? So like that's kind of what I'm watching on the spiders, because the 200A on the spiders is similar to what the 100A was on the Qs, in the sense that it's basically like the last line of defense for bears, right? So bears that were like holding out hope that we might get a pullback, and moving averages are relevant, but they're not like the be all and end all. Like we could still have a pullback even if we were trading above moving averages, but the 200A was definitely, like, as you can see, it was basically like the last significant moving average on the upside. And now as we start to move above it and the 8 EMA starts to cross above it, there isn't a whole lot of like really well defined levels on the SPY until you get back up into like the February like levels, or like this gap. I mean, that's still a pretty significant way away, but you can see what I mean why like the 200A was important, because, well, first of all, it's like a key focus level for a lot of people, but it's also like kind of like the last line of defense for bears. And now we're above that. We've back tested it twice intraday over the last week, and now you're starting to see the 8 EMA cross above. So, bullish ideas. I think now like the mix of like bullish to bearish ideas is almost like 80 to 20, maybe even like higher. And I don't normally like being so one sided. I tend to get nervous when like every single thing seems to be lining up for like higher, right? If every single thing seems to be bullish, and or in like on the flip side in March when like every single thing seemed to be bearish, it really makes me nervous. Um, I know, but yeah, I mean, like that's definitely one of like the things that kind of like I feel like it's kind of like a constant battle, right? Is like what's going on in the real world and what's going on in the stock market, because yeah, I mean, there definitely is a disconnect, and kind of reconciling the two can be tough, right? I mean, I was talking about Apple until like the close today, but like like Apple's like numbers have like collapsed year over year, and like their stores are closed now again, right? And like the demand is down, like all of these things, like it's hard to reconcile like how Apple could be trading back at its 52-week high like nothing ever happened, right? But from like a trade standpoint, I mean, like sometimes you need to separate one from the other. You need to trade what the market's giving you, not what you think should be happening, I mean, there are instances when I like when both line up, right? Like when like a fundamental opinion lines up with like a technical opinion, right? Because like those are the trades where I have the highest conviction, when the trade makes sense and the trade looks good, right? Like those are the trades where I have higher conviction. Like I want to put more size, right? I want to go harder on those names because like they make sense for two reasons, right? Versus like some of the trades right now just look fantastic from a technical point of view, but it's hard to reconcile the fact that like things have like deteriorated so much. Like how could this possibly be acting so great, like day after day after day after day? Well, I mean, one of the things that I've found, and like it's kind of like helped me over like the last like 2 years, I guess. Like especially like it was the beginning of last year when we had. Well, actually, I guess it's been kind of like almost since like 2017, to be honest. What I try to do is to me it's like one of like the best signs for me to like kind of shift my mentality and start getting more bearish is when I see like a large distribution down day on the market. So like when I see like the SPY close down, say like 2.5, 3% on significant volume, right? And we close at like the low of the day, right? Like that to me is what I call a distribution down day. All right. And like those are the days where I really take notice. So like I kind of wait a lot of times until I see a distribution down day before I really step in and get like significantly like short stuff, or really like start to like load up on like spider or like fixed options, right? And to be honest, I mean we've had a couple red herrings where I thought like we might be in that ballpark. So it was like back at the end of April, I thought like right here that we were potentially going to be doing that because we had like a significant down day. We didn't close like on our absolute low, but we closed pretty close to it. The volume wasn't huge, right? But like those are the types of days where I'd almost prefer to wait and see for like a significant down day, like a 2.5 to 3% down day on heavy volume, and like I could almost use that as like a sign saying, okay, now it's time to clean up longs, or now it's time like I want to start thinking about shorting more aggressively, right? Versus just trying to like consistently like fade the market higher and higher and higher because I found that if you like miss the first day, um, odds are like those distribution down days, like if we're gonna follow through to the downside, like there should be plenty of opportunity after. All right. So that's kind of what saves me sometimes from just kind of consistently like fading the market higher and higher and higher. Is that like I'd almost prefer to like miss the first 2 to 3% move lower if it gives me like a good signal, because then I'd have more confidence that we might actually follow through to the downside versus just trying to like short every little downtick. So that's actually really what I've been waiting for is like that distribution down day where it kind of signals a change of trend or a change of character. It might be actually really ready to start rolling. It's just part of like cheap, like the those are part of like cheap like low debit weekly call spreads. So I'm long the 10. What am I long? I'm long the what am I long? 1070s. Yeah. So it's part of yeah, yeah. So like the reason why I did that it was just rolling up. I had some like short term options coming into the week, and I was rolling up. So I wanted to do something that was kind of in like the like 50 cent debit range. So I was looking at like options, and 1070 would be a measured move above the previous high. So that's why I was looking at the 1070. But yeah, the 1100 strike calls they're short as uh, they're short as like a piece of like the of call spreads. So I'm not like net short them. But yeah, the reason why I chose 1070 was because it was basically a measured move level above previous high, which was 980. 10% measured move above it. I mean, I it doesn't even have to get there. Like if Tesla gaps up like 20 or 30 points tomorrow, those are probably like double or triple. So that's really like I don't even necessarily think it's going to get anywhere near that, but that was my thinking behind it. I was looking for something in like the I was looking for something in like the 50 cent debit range, um, where I could like maybe double or triple my money pretty quick if you had like a big move. But yeah, I'm not net short. Um, I'm usually pretty. It kind of comes down to price. So like if I'm day trading stuff or just like short term weeklies, like I am looking at I'm looking at, yeah, I mean levels that I think could, they might be like a long shot, but levels that I think could potentially, if things line up, could be in play, and or prices. So I'm looking at like things, contracts that are usually uh, below like a dollar, because what I've found with like weeklies is that like I like to keep my risk lower with weeklies, because if you get like kind of like an adverse move against your trade or against your position, um, it can really take like it can really take like a hit. Like so, like if you're sitting long calls, all of a sudden you have like some, say we have like some like China related headline, or whatever it is, right? And all of a sudden like the market drops like 1%. It can really like lead to like a real significant move against your position. So you see like your premiums like get wiped out real fast. So I kind of I kind of approach with the weeklies from the perspective in the back of my mind that like I almost consider like the risk higher. So I almost am like looking at them as like I could potentially lose like 80% of this or 90% of this, right? Like even like 100%. So like I'm usually looking at like contracts. Um, I'm usually looking at contracts like under like a dollar, or like or positions that are like a dollar net debit or lower, because I'm basically like when I approach weekly contracts, I usually assume that my risk is higher than it would be on like longer term. So it's either like the way I select the strikes is it's either due to like the net debit prices, or like if it's like a technical level, which I think could theoretically be in play. Does that make sense? But when I'm trading, yeah. Well, that like and then so yeah, I'll buy some stuff, like I'll buy some like weekly contracts that are real out of money, but I hardly ever hold them. Yeah. So like the reason I do that is because like I feel like I could like just low risk double my money pretty quick if the things move fast. That's usually why I do it. Plus I don't have to like manage them as close. But like I said, like I typically view those from like a higher risk perspective. Oh yeah, I like I'd say most of the time. I mean, I don't know what actual percentage it would be, but most of the time, if I'm day trading stuff that's out of the money, I am not holding it either until the strike or until expiration. So I'm usually closing it out beforehand if I have the ability to do it. Sometimes they're worthless and I can't close them out, but yeah, when I'm just like day trading like weeklies, like I'm looking at like some lower debit contracts, and I'm looking for like a double or a triple pretty quick, and then I'll just close them out. Um, I don't know. I don't know how it relate. I mean, it's like I guess like I would say it's like less. They're like less than tier one. It's only like a half a tier. You know. Um, they're just I view them kind of like um it's like either. like so the way I approach like the weekly, if I'm day trading weeklies, I'm either I either want to close it out that day, or if I think there's a reason to hold it overnight, then I'll probably be looking to close it out the next day. But like like the way it normally works is I feel like you need the move to happen very quickly in your favor to capitalize off of weekly contracts. So if I get into like a weekly contract looking for like a day trade, and it really doesn't do what I want like that first day, or even like early the next day, then like odds are like my chance of it working out are really like decreasing dramatically very quickly, right? Unless there's like a news announcement where I think that there's a possibility it could move, you know, like later in the week. But like I would prefer like if I get into something, right? Like say, um, what was that day traded today? I don't even know. I forget what I was day trading. I didn't. I wasn't too active today, but so basically like I basically want like I want that to move like immediately. So if it doesn't move immediately and like I'm underwater on the contracts, and like there doesn't really appear to be like a good chance of like a gap overnight, then I more likely than not just prefer to like get out of it and revisit it the next morning, right? Because if it doesn't have a gap, if it doesn't have a big, so like if a stock is lifeless, it's not moving, like I'm losing money on my options, right? Then odds are it's probably not going to have a very big gap like the next day, because I mean, it wasn't in play one day. There's really no news on it, and it doesn't really look great, right? Then odds are I could probably get that same contract or even like a better contract like the next day for like a better price, just because like the overnight implied volatility crush is so high, or time value crush. So yeah, I mean, yeah, yeah, I mean, so I was actually we're gonna talk about that in a sec. I'll get into it. We spend a lot of time going over this, but yeah. So I like like a 2% of capital. Like I feel like that's kind of standard, right? Like a 2% of assets under management. I think for more active traders, like 2%, maybe you could say that's a little bit high, depending on how active you are, how many trades you put on. Um, like if you're more of like a concentrated trader, in the sense that you only have like a couple really a couple really heavy bets at any given time, then like a 2% capital rule probably works for you. But if you're somebody, or like kind of like me, like how I trade, or if you're somebody that has like multiple trades on at any given time, maybe you're very active on a day-to-day basis, then like a 2%, if you're putting on 10 per 10 trades a day, right? Then a 2% assets under management rule is probably not going to work for you, because then you're going to be risking like a significant portion of your total capital on a given day, right? I mean, like that really like is a significant portion of your risk, right? So I think it kind of depends on each person and what their style is, and how many different trades they're putting on at a given time, right? Like if you only have like maybe like 1 to 2 to 3 positions on at a given time, then like a 2% AUM could make sense, right? If you have 10, 15, 20 positions on at a given time, then a 2% in each of those is going to be, especially if you have like 20, that's going to be 40% of your total capital. Um, and I mean, that might work, but it's also going to be a significant amount of risk, right? So it's going to depend a little bit on how your trading style evolves, and like how you like to trade. Um, I think maybe I think 2% is not too much, but I think I think 2% should be like one of those positions where your confidence is higher, right? Or where you have more conviction. So not I don't think like every trade has to be like a 2%. I think you want to have like a window, like a fixed window where like most of your trades fall in terms of like your level of risk. But I also don't think that every trade has to be that. And again, like this is going to be like very individual focused, right? Like how you come up with like your net risk for each trade is going to be more tailored to like your style and what you're comfortable with. Like every single trade I put on is not like max allocation, like some trades I'm small, just a flyer. Some trades like I'm tier one, some trades I'm tier two. Like I do like allocate more size to the trades that I have more conviction on, right? Or the trades that I think that have more potential. Like some trades I feel like are inherently more risky, so like I don't necessarily need to add as much risk to necessarily get the same type of return, right? I don't know, cause like I don't really I don't typically view I don't view my trades from like an assets under management. Um, I yeah, it's like it's hard to say because like I don't view because like I'll trade like equities too with margin, so like not everything like I trade with like margin in like certain areas, so like not everything is like it's not apples to orange apples to apples, because it's not like assets under management, because when you're trading on margin it kind of skews things. Like that I wish there was like like a like a definite answer I could give you, but like I feel like it's something you're gonna have to, you can kind of get like like a little bit of like a guideline, um, but it's something you're gonna have to kind of like fiddle with until you find something that like a level that works for you. Yeah, yeah. I mean, if I can, if you want to like, if we could like talk about it more, or if you want to like bounce like like a question off of me, um, like we could do that, and like if you want to like shoot me like an email, like maybe like go over this a little bit more in depth, and like um, we can like go through it. So I'd say for me, like a high conviction trade would be, well, I guess there basically would be like two scenarios. So it'd be either like a high conviction, a high conviction technical trade for me, like a swing trade, um, would be um, basically like what we were talking about just a few minutes ago. It's like when like a fundamental idea and a technical idea like line up together, right? So like when like there's like say like a combination of like really positive like news around a stock and like really positive technical action around a stock, right? Or like the opposite, like really negative news and a very like negative like technical pattern or very bearish technical pattern, right? So like those would be those would be like a combination where it gives me like higher conviction for a trade, right? So like sometimes if it's just like a technical idea, I might not be necessarily as high conviction. If it's like a combination of like say the company just had like blowout earnings, right? And gaps up, it's forming like a real tight bull flag, right? So it's like strong fundamentals, like strong sector, and then you have strong technicals, right? Like that to me would be like a higher conviction pattern. right? Like that would give me a higher conviction when like multiple signals line up together, right? And then you could even like throw in like if you see like really great participation in the option market, right? So if you see like the kind of like the icing on the cake on that pattern, right? If it's like a blowout earnings, strong sector, tight bull flag, right? And then you see like massive amounts of call buying, right? Like that to me is like a perfect combination where I would be like I would want to get like bigger size. All right. Like I don't use unusual options activity as like a definite like trading signal. If I see like a big block of calls bought or a big block of puts bought, it doesn't mean like necessarily just want to jump into it. But like when like one of the reasons why I'll use it is if it happens right at like a kind of like a key technical inflection point, or if it lines up with like kind of like a thesis of mine, then that also gives me like more confidence because it shows like participation in like that trade. So I like to see that. The other conviction area would be like, I mean, it's a little bit different, but like for like catalysts, um, what I like is kind of like when like I guess for me like a catalyst trade where I'd have like more conviction is when like multiple signals kind of line up again. But it's also like when I say multiple signals for a catalyst trade, it's a little bit different in the sense that like I want like the option pricing to line up with the technical setup, right? And it I want like I want to see like short interest, or I want to see like maybe some like recent like news items, right? So they're like the like higher conviction earnings trade or higher conviction biotech trade, like those are going to be a little bit different. They're going to, I want to see something more along the lines of like the option pricing has to line up, the technical patterns have to line up, like the news around that company has to line up. Like the last couple quarters, like I want to, I want the action around the last couple quarters to really be compelling, right? So there's a few more things that need to line up for a higher conviction um, around like an earnings or a biotech trade. But when they do, man, those can be some like really powerful moves. Awesome. Like that's when you get like those. That's when you get like those home run trades. It's when like those like I mean, it's like when you get like the two for one. I call them like the earnings combo trades. It's when you basically when you get those two trades for the price of one, right? Where you get like the earnings trade plus the technical trade. That's when you get like those monster paydays for options. Does that help? Does that kind of answer? Did I kind of answer what you were looking for there, Lynn? Yeah, cool. Not strictly, no, no. I find that there's too many there's too many red herrings when it comes to unusual option activity because you really don't know what people are doing with it. I mean, like and y- like it's like just because you see like a big block of calls or a big block of puts, like that to me in and of itself is like it doesn't like tell me anything. Like who's some like who's some like who's some like hedge fund manager that's really been lousy right now. I can't even I can't think of anything off the top of my head. Like who's some hedge fund manager that has like an awful track record, or just like the past year. Like I like shoot out a name. Like I'm not trying to like rub it in on them or anything, but like who's somebody that's had like a bad year. Um, I can't think of anything. Maybe like say like I feel like Icon has been in some dogs, right? So, you know, if you're like say you see like a big block of calls. So like this is like one of my pet peeves with it. Let's say you see a big block of calls bought, right? Like 3,000 calls on some random stock, right? And everybody like jumps in. They're like, oh, call buying, call buying, call buying. It's like smart money. They must know it's going to go higher, right? I mean, how do you know that's not like some fund manager that couldn't hit the broadside of a barn in a snowstorm right now, right? You know, like it could be somebody that like they have a lot of money, but they have been trading like horrendous, or they've been trading so poorly, right? Like just because you see like unusual call activity, and just because it's like a decent amount of money, it doesn't mean that like those people know what they're doing. It doesn't mean that it's going to be right, or it doesn't even mean necessarily what you think it means, right? Like if like somebody could be like short the stock and are buying the calls as like a married like hedge position, right? Or some people could be some people could be like long the stock, right? And you see like a big block of puts being bought, and it's not because they're bearish on the stock. It's because they buy it as like a married put position, right? So like you can't ever know exactly why people are doing what they're doing with like those options. So it's like using them strictly as like a trade signal for me is like I feel like there's just too many red herrings, and there's like too much misdirection all the time. So I like when I like when like the unusual option activity lines up with something that I'm already like looking at, or when it's like it confirms like a bias I have, right? So if I see like a beautiful bull flag, and then all of a sudden I see like the call buying get lit up on it, right? Like that's like a great sign to me, because it makes perfect sense. Like it's like a beautiful bull flag. Stock is starting to break the bull flag, and all of a sudden like the call buying just gets like a 3,000, 2,000. All this call buying starts to get bought, right? And it's like right as like a stock is breaking out. I mean, like that makes perfect sense. But if I just see like a stock like flatlining, and I just see a block of calls get bought, like I mean that doesn't do anything for me, you know. Yeah, I prefer. I'm more of a trend trader, Len. So that's my style. I prefer to like. I'm less of like a some people work better as reversals, like they like to fade strength and buy weakness. I mean I do some of that too, but I feel like my style and like what I find works best for me is when I'm sticking with the trend. So strong stocks, I'm looking for like looking for like bullish continuations. I'm looking for breakouts, right? Weak stocks, maintaining weakness. I'm looking for breakdowns. I'm looking for possibly like reversals off of moving averages and break like moves to the downside. So I my style is more of like trend trading. All right, so it's less fading the gap ups into resistance. Um, Although I do that, but I wouldn't be like fading it as it's rallying. I'd almost prefer to wait for like the first down day, and then I have like a level to like work with. So like I'm less interested in fading like as it's rallying. I'm waiting for like the exhaustion to hit, and then I'll look at possibly viewing it as like a short versus like fading, 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 looking for a reversal. Okay. Um. Well, we spent a lot of time going over this, so I guess I'll just run through these quickly, and then we'll jump into. Well, you know what? I talk about this, but gold. That was one of the frustrating things last week. Gold GDX, they gave like a little bit of like a head fake when they broke back below 160, broke below 20 day. I'm glad in this sense that we stuck with it, because it's come right back. But like that was definitely one of those frustrating moves last week where you had like leading sectors or leading areas had like these false breakdowns. So I wasn't pleased with the way that happened, but I'm glad that we did stick with it. And I guess one of the reasons why I stuck with it is because we'd already made a decent amount of money in it up until that point, right? So it was just rolling on top of like an already rolled position, versus like it wasn't like the original trade idea. So like that gave me I feel like that gave a little bit more wiggle room to like widen the risk out a little bit on that one. But like gold, right? GDX, same thing. Had a little bit of like a false breakdown, and now it's like firming back up again. I'll say like silver is kind of in a world of its own. I mean, it's coming from like a lower base, but held the 200-day perfectly, right? And now it's starting to move higher. So it's actually almost back at its 52-week high. So silver has really been real impressive, really really impressive. So like that's still acting great. Um, the VIX, we haven't talked about it. I mean, it hasn't really been much of a focus because it's still kind of like in this like downtrend. So I mean that's good from an option trading point of view because lower VIX, it's a pricing component of options. So like a lower VIX means options generally are less expensive. So lower VIX isn't necessarily a bad thing. I mean it's bad in the sense that if you're long in the VIX, like it's not going up. That's not great. But um, from an overall pricing perspective, it's actually better for an options trader. So right now the VIX kind of just like hanging out in like a lower range. So just kind of waiting on that thing to either like break out, break down. But right now it's just kind of consolidating a lower range. And then treasuries, we were talking about this last time. Still kind of in like a same or similar place as where it was then. I mean, it's below all the moving averages. It's not cracking. It's not acting strong, but it's also not breaking down just yet. It does seem, though, that momentum should start to pick up sooner rather than later because now you have the 8 EMA and the 20 both kind of weighing on it. So I feel like if it's going to start cracking, and probably start cracking soon. So I know some of you guys stuck with that. I closed it out when we had like this really nasty sharp bounce. So that's when I got out of it. But some of you rode the roller coaster, and if you're still with it, yeah. You rode the roller coaster. If you're still with it, I do think though that the way this is playing out now, you should see a move lower. I'd say probably sometime over the next week. I feel like if it's gonna go, it would probably be soon. Just the way like this is lining up right now. Um, so yeah, that's worth keeping an eye on. I mean, basically, you'll know. I mean, if it loses 162, I mean that really should be the point where it starts to pick up momentum. Is when it loses 162. It's a pretty clean level right now to work with. Right, you got 162. It's like a real clean area of support. If it loses that, it should start to roll. I might actually put an alert out if it does. Yeah. Well, hopefully the former, not the latter. Yeah, I mean, you can never rule it out. Yeah, I mean, if there's some like major move in the market, you might see the bonds have a big move higher. Like if we have like a significant drop for some reason over the next week or two, people might pile into bonds. Yeah. Um. Okay, and then I guess um. So I guess like one thing I want to talk. Let's go over some slides, and then like one thing I want to talk about is like how, which I'm sure you guys have been noticing, is that a lot of stocks are really ripping ahead of earnings, and it's like I'm not going to say like it's necessarily a bad thing. It is what it is, right? It's like responding or reacting to what the market is doing right now. So that's why I'm sure you noticed like last week, and even like this week, I tried to put on, you know, uh, as as I tried to like screen for some good patterns where I thought that there was a better possibility that the stocks could move higher ahead of earnings, because that seems to be where a lot of the action is taking place, is like the 2 to 3 4 days before stock reports. You see, like a lot of real aggressive buying. So um, you know that's that's what I tried to put a few trades on earlier last week, right? And then like we just rolled up work. So Slack we put on early, Elastic we put on early. So like I'm trying to like give like some ideas where we can like put them on early and hopefully catch the move early, either scale back risk, take money off, or just close out the trade entirely ahead of earnings, because like that's what the market's doing right now. Like stocks are just absolutely, not all of them obviously, but like there's a handful or maybe more than not that are just absolutely exploding into earnings. So if that's what the market's doing, and that's how they want to approach it, then we just kind of need to like shift the risk from being like the day of earnings to like 3 days prior to earnings, or a week prior to earnings. So that's why like I'm trying to like push out some of like the ideas like a couple days ahead of time, just because I've been noticing that like things are really kind of like ramping into their reports, right? So it was like Box, Dollar Tree, Elastic, Slack. Like a lot of these names have really been just tearing into earnings. It's a crazy move. Which is, it's also annoying because like the ones that I'm not in, I was actually thinking about drawing this up. So like I don't know if you guys watch those earnings on the radar videos, but like Zoom, I was actually thinking that this would be like a pretty solid earnings play this week. I actually, the option pricing was high, but I also thought that it wasn't high relative to how much this has been moving like on a daily basis, nor based off of how much it's moved over the last few months. So, um, the option pricing, it was elevated certainly, but I actually thought that there was room. After today's like 25-point move, I don't have that confidence anymore. So this is one that where I kind of wish I had put something on early, but at the same time, I was also thinking about with Zoom. I was more like undecided whether it was like going to be like a just a strictly bullish idea, or like a strangle. So both. So like whether it's just the bull side or like both. So like if I think if I'm leaning more towards like a volatility strategy, so like a strangle or even like a straddle, then I can't really enter that early. Um, and that's what I was kind of thinking. Like for Zoom was like a strangle, because I thought that there could be like a 30-point move either way. Now, I mean, like the trade is different now, so like that's why I didn't write it up. But it works both ways. Like sometimes it works in your favor, other times it works against you, right? Where if it takes off and you're not involved, then it doesn't really give you an opportunity to get involved. But I wanted to like bring that up because um, I have been like trying to like push out or like write up some earnings ideas like a few days in advance, versus like most of the time, or in a normal quarter, I prefer to like write up like an earnings trade like the day of or the day before, just because I don't want it to move too much ahead of time. But like now, the way things are playing out, kind of have to like shift the timeline like 2, 3, even like a week ahead of when they're expected to report. Elastic's been awesome. I think it's really been rallying hard. Okay, so let's go. We'll go over any questions. Sorry. So once I get started, I can really get going. Okay, so like today's. Oops, I'm locked out here. All right. So I feel like today's lesson is more of like a building block lesson. That's what I call it. So um, it's always good to just go over some like more basic ideas, or I know I'm sure a lot of you have been trading for a while, so like this is probably something that you've already gone through, or maybe you haven't like thought about it, but maybe this is what you're doing. But it's I think it's always good just to kind of like refresh like certain like real key ideas, right? And like profit goals and like losses, right, are one of like those real key elements for active trading, right? Um, so this is like when I'm talking about daily profit goals, I'm not talking about individual trades, although like that kind of lines up the same way. This is like your P&L, like your daily P&L, right? And um, again, like these are your goals. So like not every day you're gonna hit your goal, um, but like it's good to have a goal to at least have something where you're working towards um, that. If you are you have something like a carrot at the end of the line where you kind of want to constantly be either improving or working towards something, right? Like some people like to have that motivation where they're constantly working towards something, except just versus just like being happy with like being up like whatever they are up. So this is definitely going to be more tailored to active traders. So like people that are trading on like a daily basis, or are you're kind of like managing your P and L a lot closer than say like month to month, right? So this is going to be a lot more for like the active traders, right? Um, and now what I kind of like ask people when they like when they or what I like tell people when they ask me like how do I set my goal, or how should they set their goal, their daily goal, right? And I say that like a good way to do it, and that's like dynamic in the sense that it's going to constantly be evolving as you evolve as a trader, is to take your top 3 to 5 sessions from the previous month, average those together, right? And that's going to be your daily profit target, right, or your goal. So like on a given day, if you hit that profit goal, um, what I do when I hit mine is I don't necessarily stop trading, but I will size down, right? So I want to make sure that like I'm locking in majority of those gains that day, and once I get to that point, then my risk I want to lighten up, right? Or I want to like size down or maybe become less aggressive trading that day, right? So because I tend to sit in a lot of different positions. I mean, I'm not going to like close out of everything, but like my day trades, I might stop day trading, right? I might start just like closing out, taking more money off the table of my day trades, right? So basically, but that's the way like I approach it, and that's kind of what I tell people is like take your 3 to 5 best sessions from the previous month, average those together, and that should be like your daily profit and target goal, right? And as you get better, and as your daily gains become higher and higher, then like this is going to keep adjusting higher, right? So it's like a dynamic target. It's going to move as as you move, right? Or as you progress. If you want it to be more aggressive, then what you could do is like you take like your top session from the last 3 to 5 months, right? So that's going to be a higher daily target. But that's if you want to be more aggressive. You can just go back over, say, your last 3, 4, 5 months, take your best day, add those together, and then like you can use that as like your daily P&L target. All right. So along the same lines of thinking, right? It's you need to have like a daily max loss limit or daily max loss level, right? I mean, you have like if you use a stop loss for an individual trade, then to me like it makes sense to use like what should be like a stop loss or considered a stop loss for your daily P&L, right? Because this is down here at the bottom is like this. It's like it's one thing that I'm constantly reminding myself, or I try to remind myself, is that I mean, as an active trader, as a day trader, right? Like this is not like a sprint. Like this is a marathon. I mean, you're doing this 5 days a week, 20 days a month, 12 months a year, right? It's like day in and day out, right? So it's there's going to be days when you're just like things aren't clicking, things aren't firing, for whatever reason. Maybe it was like something you didn't do, like maybe it was like it was something outside of your control, or maybe it was just you goofed, you're the keyboard error, whatever it is, right? Like sometimes things don't click, your trades aren't working out, so like why are you going to force it, right? Like just take a break, right? Like cool off trading that day, come back the next day refreshed, and get after it again, right? So I really like, some people say they don't like to manage their P&Ls, and I don't really like to manage my P&L necessarily either, but I do like to have a target that I hit, that I want to start being less aggressive, right? And if I get like a stop, if I have like a P&L level that I get to where I'm down that day, then I really want to like just take a break, right? I mean, like come back the next day, get after it the next day, right? So kind of along the same lines of thinking, right? So if I have my P&L target, right? So like my goal for that day, which is the top 3 to 5 positive sessions from the previous month averaged together, then my daily max loss level, or what I don't want to lose more in a given day, I would use like a third or half of that. All right. So the example is, so say like your daily profit target, like hypothetically, is $1,000, right? Like that's based off of your average best day, like the previous month, right? So then for me, what I would want to do is have a max loss on any given day at, say, like 300 to 500, right? So like a third of that daily goal to like a half of that daily goal of 500, right? And again, I mean, like this kind of like it comes back to the idea of like maximizing your up days and minimizing your down days, right? So it's like you don't want your down days to be $1,000 or $1,500, right? If you're only targeting 1,000 on your up days, so you basically want to make sure that like your down days are less, and in this case, like only half or a third of your maximum up days. All right. So it's kind of similar to how I manage individual trades, right? So it's like if my target for most swing trades is like 100% profit gain, right? Then I'm using like that 50 to 60% debit loss as like a stop. So my daily P&L, my daily stop levels are kind of similar. It's like if I'm say hypothetically you're targeting $1,000, then I don't want to lose more than like 330 to $500 on any given day. All right. It's it's not rocket science, right? Like this is I feel like this aspect of trading more comes down to like money management, but it's just super important. So kind of what you were talking about earlier with Mercy is that um, if you view it more from like an assets under management point of view, right? Like it's you could say like zero point 0.5 to 2%. All right. So like this is again, I think something probably more useful for those that are a little bit less active. Like the 2%. Again, if you're trading a ton of trades, if you have like a ton of trades on a given day, you're sitting in 20, 30 different things, then a 2% AUM for each individual trade might be a little bit too high. You know. But that, so just breaking down the math, like, so say like your account's 100 grand, right? And you use like an AUM, like a 0.5 to 2% AUM as like a max loss, right? Then that would be about like $500 to $2,000 on a given day, right? So this is like, I think this would be more useful for those people that are less active, um, but you kind of figure out what works best for you. Um, but at the end of the day, it really all comes down to like money management, right? Like you want your up days, or you want your winners to be maximized, and you want your down days or your losers to be minimized, right? then you always want your best trades to be orders of magnitude better than your worst trades. Right? So that was I basically so I wanted to go over that because it's important. It's like it's one of those like those fundamental aspects of trading. Um, I get asked the question fairly often, and I feel like I haven't talked about it, so I wanted to go over it. Um, I'd say like the one thing that can be a little bit different, right? So if you're using like your daily P and L targets or your daily P and L losses as like levels, right? What can kind of complicate it a little bit is if you have like a bunch of swing trades, like for me, or no, if you're in like a bunch of different swing trades, um, you know, you're not going to want to you're not going to want to exit those trades just because you hit your daily P and L, right? So you kind of have to be mindful of the fact that you're in a bunch of different swing trades and your risk is going to be a little bit different, right? So like that's kind of in the back of my mind, right? Like if I'm in like a bunch of swing trades and like they're moving against me on a given day, like I don't want to just exit my swing trades just because like I'm at like my daily level that I don't want to lose more money then, right? Like I understand that like it's not going to be perfect, but what I do in that scenario, right, is just I probably just not look to day trade, right, or I'd either like I try to like potentially like scale back risk in other things that maybe I'm not like attached to, right? Yeah, that's good. Yeah, I mean it's pretty simple, but I feel like it also it allows for growth, right? So it's not it's not selecting arbitrary numbers, or some people just select like arbitrary like out of this world numbers to say like I want to make like $1 million on a given day. It's like, yeah, it's great, so do I. But if you're only making $1,000 a day, like having $1 million profit target is completely useless, right? So like this will grow as you get better, right? So like as your daily gains start to add up, then you can kind of keep increasing your target and keep increasing and keep increasing. Um, or conversely, if you go through like a rough month, right, then this will help you kind of like maybe like ease off, right? And then you want to like shoot for like more manageable targets like the next month, and like we'll start working your way back up again. So it's kind of like it kind of works both ways. It's like when you're like hitting it out of the park, then it's going to keep expanding and you're going to like keep getting better. And then like maybe you go through a slump for like 1 month or 2 months, but then when you start to like turn higher, you're going to have manageable targets on the way back up, and then you start that whole process all over again. But that also means that like your down days are going to be smaller too. If your targets, your daily profit targets, start to decrease, right? If you go through like a slump, but then also your daily max loss limits will start to decrease too, right? So it's like a dynamic system. Um, I do I do sometimes, Mercy. I will. There'll be instances when like when I'm in like a bunch of swing trades, and it'll kind of like skew my P and L like way to the upside or like way to the downside. And it can be kind of annoying, like throw off like what I wanted to accomplish that day, right? Like, I mean, if it's to the upside, like I'm less upset about it, obviously. But if it's to the downside, it's gonna upset me because it kind of, it could overshadow maybe like a good day I had like day trading, right, or like scalping stuff. So I could be upset about it, but like that's the one thing I wanted to put as like a caveat is that if you're kind of more of like a swing trading perspective and your holding periods are like a week, couple weeks, a month, right? Like you kind of need to have a little bit of like a leeway. Like I don't necessarily just want to like exit a trade just because like I triggered like my daily loss level, right? But what I can do to maybe like maneuver around that is to either maybe like take off some risk in like an area that I don't really care as much about, right? If I have like a trade that I'm just kind of sitting in, but it doesn't look great, but I'm just sitting in it, right? Like then maybe I'll take off some risk there, or maybe what I'll do is like kind of like like focus less that day on day trading because I don't want to like add more risk, right? So maybe I won't be as active day trading, right? So like there are ways to maneuver around it. But yeah, I'm not going to just like kick out like a swing trade because it's down that day and it triggered my like my P&L, or it triggered like my max loss level, right? I'm not just going to boot out the trade for that reason. But there are ways that I'll go about like maybe like managing it otherwise. So whether that's like not day trading as much, maybe like cleaning up some other areas of risk that I'm not like too attached to, like stuff like that. Yep. Any questions? This thing looks great. I mean that's most of what I wanted to go over tonight. If you guys have any like questions you wanted me to go over now, or how are you guys feeling? Are you tired? Are you exhausted? I think we're gonna let this ride into earnings. It's elastic. I think this thing has a good look. Yeah. Oh, that's awesome. I mean, it's I'm glad. I'm glad, Joel. Yeah. I mean, like I said, like if there if if there's if you ever have any questions like in between when we get together, don't hesitate to reach out. I mean, I'm happy. I'm happy to help. Like, you don't have to like save the questions for like the couple times we get together each month. Just like shoot me an email. I'm happy to help whichever way I can. So elastic. Um, so tiers, I operate a little bit. I yeah yeah. I mean that's it is one of those. I mean, you can't be in every trade, right? I mean, it is what it is. Like it's plenty of trades that I've missed that I'm kicking myself over. um, so like what I like to do, and I'm sure you've noticed it. Yeah, yeah. These are all recorded, Len. So they're up on the T3 YouTube stream under the options and play tab. Typically by like the following afternoon. So like tomorrow afternoon should be up. So like this will be up, and basically all of the previous sessions we've got together. So you can check those out. So I guess I guess what I would say about like FOMO and like chasing is that I I don't necessarily mind chasing something if I can manage my risk properly, right? So that I think is so so like the way like the options work, right? Like I can basically design like a so like Elastic is like ripping higher, right? But that doesn't mean like I have to go crazy like buying calls on it, right? Like I could still potentially participate in like a bullish strategy, but I can also like design the risk to be as much or as little as I want, right? So you know that's why like I don't necessarily mind chasing things sometimes because I might just like approach it with like lower risk, right? Like so instead of like drawing up like a trade where I'm paying like $3 for like an option position, whatever it is, maybe I'll just commit like 50 cents risk to it and just like take smaller size, right? So like there'll be instances when like I maybe like I miss like a first 2 days of a move, and I'm acutely aware that I'm chasing something, right? So like I don't necessarily want to like put like a full position on because like I know already know I'm chasing it, but I also think that there's a possibility that it could go higher. So what I'll do is like I'll just put on an option position that is just lower risk. Maybe I'll just put on lower size, right? And just I want to participate, but I also don't want to get run over, right? If it moves against me, if it pulls back or bounces, whatever it is. So like that, yeah. So like that's why sometimes you'll see me like go further out of the money on like some of like those lower debit contracts, is because I want to participate, but I also don't feel like getting like my face ripped off if the thing reverses, right? So like if I lose a little bit, that's fine. Like that's the price I'm willing to pay. Like I don't want to lose a lot of it, right? If I lose a little bit, okay, I can live with that. If I lose a lot because I'm chasing, then those are like a situation where I'm like not going to be pleased with myself. But again, if I'm chasing, there has to be a compelling reason. Like I'm not just chasing because it's going up every day, right? Like if I'm chasing something, it's because like I think that there's still room for it to go higher, right? For whatever reason, or B, like there could be like a catalyst coming up, like an earnings report, right? Like if earnings are coming up, then I might not mind chasing it because it could still potentially go higher, right? But like if the stock is just going up and up and up and every single day, and like I'm just worried that it just keeps going up and I'm not involved, like that in and of itself is not a compelling reason for me to get involved, or a compelling reason for me to jump in. Yeah, like DraftKings, like I I I covered this way too early. I mean, I still have like the writing on here when I was talking about it. I mean, I think our last exit was at what, like 27 and a half, and now it's at 43 and a half. So yeah, I mean, I left a absolutely ridiculous amount of money on the table. Um, look, this is when I was talking about it. It was in like the 20s. Ugh. So yeah, I mean, like this to me, like I probably wouldn't chase something like this because there's no earnings coming up. Like there's no, I mean, it's literally just going up every day. Like I feel like that's like a hard pattern. Um, Versus say like, like um, let's see, versus like a Tesla, right? So like a Tesla, you might say like, oh, you don't want to chase it after like the move attack. Oh, my chart's not refreshing here. No, guess it doesn't want me to pull up Tesla. Uh, yeah, it doesn't. I don't know why it's not pulling up. But like so for like a Tesla, like it was up a lot today, but it's also underneath like its 52-week highs. So it's like to me like there's still some like leeway there, because it's still like what, like 70, 80 points underneath its high from earlier in the year. So it's like, yeah, I might be chasing entering a position today because it's up so much, but at the same time, it's still down like 70 or 80 points from where it was like a couple months ago. So there's still like it seems to be like a path higher, right? Or if Tesla had earnings like next week or this week, I could say like, yeah, I might be chasing because it's up a lot today, but at the same time, there's still a pretty big catalyst coming up where it could still be a big mover, So like there has I'm not just going to chase just because something keeps going up every day. Like if I'm going to chase, it's because like there's still technical reasons to expect it to go up, or there's like a fundamental reason where I think it go up. Sorry, I don't know why. I don't know why my charts aren't working. Let me refresh. Oh, that's not good. There we go. Yeah. Now we're back. So yeah. So it's like, yeah, Tesla's up a lot, but it's still off its high. All right. Maybe that's a good place to wrap things up. How's that work? Good place to take a break. All right. Cool. But I mean, I say I say it each time, but I really mean this. Like, if you have any questions at any point between now and the next time we get together, I mean, please don't hesitate to reach out. Like, I'm happy to help. So it doesn't really matter what the question's about. If it's just something silly or something like really in depth, like if I can help answer it, like I will. So please don't like feel like you can't reach out even if it's just like something small, or if you want to like bounce an idea off me, like I really don't mind. So just don't hesitate to reach out. All right. So yeah, I'm hoping for some good action. Hope trading's good the remainder of the week. Hope for some good earnings trades. Um, and yeah, we'll take it as it comes, right? So enjoy the rest of your night. Stay safe out there. Stay well. Um, best of luck trading the remainder of the week, and I'll talk to you guys all soon. All right. Have a good one. Take care.